Hey, good morning. It's Mike Zschunke at Berkshire Hathaway Homes and Ship-Owned Properties in Scottsdale, Arizona. Friday morning market chat with Mike. We're going to talk about residential, we're going to talk about commercial, and we're going to talk about the economy. It's been an interesting week. First of all, touch base inventory for residential. Multiple listing service is down about 280. In Scottsdale, we're down another 27 single-family detached homes for sale. So we were looking good on inventory for a while, and we're getting there. We're close to normal, but still need more. I'm finding a lot of what I do, I guess the general house. Remember, statistics can say whatever they want, but we are a lot, the $1.5, $2.5 million price range in Scottsdale. There's not enough out there to buy, and that's what people are looking for. So we need more inventory there. That's keeping prices firm. We had existing home sales this week, yesterday even, up 4.8% month over month, 6% year over year. So it's no secret, 2024, they will say, was a pretty quiet year, but it's picking up again. We're getting momentum going into this next year here, and just good sales momentum. Past 4 years, nationwide equity has increased $15 trillion. So you may not want to get out of your 2 or 3% mortgage on your residential property, but you may have enough equity there where you can either upgrade or downgrade, put that money down, and keep your payment the same. Every situation's different, but you got to look at the numbers and see. There's a lot of equity out there, so that's people are sitting on that. So it'll be interesting to see how they tap that if they move up or down. If they start to move and get comfortable with these 6 and 7% mortgage rates this morning. I had a decent December for accepted contracts in Scottsdale. This week alone, it was increased 50% on homes under contract. Next 2 weeks are a holiday. Let's see, Wednesday is Christmas. So I expect next week and the following week to be quiet. Overall, if I'm buying right now. Get all the tax things, get my expenses done this year. If I'm selling, maybe I'm calling me today and getting ready to go on the market that first weekend in January, because January is always busy. We always see a bump in transactions in January in Scottsdale and the Phoenix area in general. I think 85 and sunny today is supposed to be, so there'll be a lot of people here. Again, supply and demand, they're pretty even. Like, they've been light kind of all summer, but there's this energy. Like I said last week, whatever industry you're in, you've got your ear to the ground. You know what's happening, and it's kind of like you just feel this energy is coming. As soon as we've said before, as soon as people start getting used to the 6 and 7% mortgages, which historically is not awful, if we weren't coming off the 10 years of 0% interest rates, 6-7%, they are what they are. And I think that's where we're going to be for a while. Remember, at the beginning of January, everybody was saying rates will be down by the end of the year. Well, we're actually up. So if you waited all year for rates to drop, it's actually going to cost you more because prices are up and rates are up. So you can't time the market. Look at what works for you. If you can buy. If you can sell, if you want to. But let's sit down and have a conversation. See what happens there. Chandler, Fountain Hills. We're in a pretty balanced market overall, residential across the valley. Chandler, Fountain Hills, Scottsdale. Now Paradise Valley and Tempe have jumped into a seller's market. Slightly, very slightly. I hate to even mention it. And Apache Junction. Apache Junction is hot. There's some new developments out there. Maybe you've seen us hike out in the Superstition Mountains. It's gorgeous. It's beautiful out there. I always think people coming from California don't cross Phoenix to get to Apache Junction. But it's beautiful and it's hot. There's a lot of, I don't remember the number, the contract ratio is real high out there. So a lot of houses under contract out there. They're moving. 8 of the 17 largest cities in Arizona had improved activity this week. So things are moving. It's funny. I had a flipper tell me the other day that they're scared. The luxury market's scared. I sent them a property of $1.5 million. They said the luxury market was slow. I said, that's not what I'm seeing at all. I've got, what I said last week on Kala next door, there's 5 properties under contract last couple of weeks. I had a buddy list $7 million property, get it under contract right away. There was another $8 million one around the corner with a huge garage under contract, 19 days. So I think that's the hot market. That $2 to $3 to $4 $5 million. That's what people are buying because they're not so much influenced by interest rates. A lot of that's cash. Remember, home sales statistics tell us where we've been, not where we're going. So if you wait, it's gone. Got a lot of off-market properties coming up. Remember that $800,000 at TPC. That's going to go quick when we're ready. They're just cleaning up a few things there. $800,000 out in Sonoran Parkway. I need a couple $5 million properties. If you've got that coming up, I've got a couple buyers looking in the $4 or $5 up to $7 million range. So in Scottsdale. So if you've got that, give me a call. Maybe we can put a deal together for you before you have to list it. Commercial. Met with a lender friend of mine. He puts the financing together for deals. We're working on 100% loan-to-value loans for 100% loan-to-value. Excuse me, I've had a little bit of a sore throat this week. I never get sick, but I did this week. So went out and banged out a 2-mile run this morning and kind of went backwards on me. So anyway, yeah, 100% loan to value. If you're a young professional, a dentist, or a doctor, all along that 101 area in Scottsdale, North Phoenix, there's Banner Health, Honor Health. They're battling it out to control that area for hospitals. So if you're a medical provider or dental provider, you want to be in that area. And you want to own your real estate. That way you have an exit plan. You have an asset to sell. I know we've talked about it with Murphy before, how he scored. He's set his family up for life buying his building. He's being an end user. Speaking of which, I need 30,000 square foot retail end user. If you've got that, please give me a call. RV park out in Quartzsite. If you're interested in financing something like that, proven track record, you'll get, we're looking for hard money for that deal. It's a good deal. You'll make money. Buyer has a proven track record. It's out by Quartzsite, so everybody kind of shies away from it. We're going to have to get a little bit creative on that financing. But, big apartment buildings, they're starting to sell. Insurance companies and private credit are, I just heard this morning, can't remember who said it. They're looking to get in the market, whether it's fear of missing out or just this anxiety. They're ready to get this commercial market moving again, and I think people are just getting comfortable with these rates. It was easy to make money when rates were zero, so a lot of people got into commercial real estate investing. Now you got to sharpen your pencil. You got to really look at the numbers, know what you're doing. The serious players are out there. They're ready to do business. So banks don't want to hold these properties. So we're seeing some deals come. We're seeing some deals. Light industrial, contractor yards. Contractor yards is hot. So it's fun. It'll be a good springtime, good season coming up here in the commercial market. So now we're going to talk about the economy. First of all, I'm going to say if your real estate agent is talking about Fed rate cuts, get a new real estate agent. They don't know what they're talking about. Even Realtor.com threw out an ad yesterday. Fed cut rates. Let's help find you a house or something. The Fed rate cut does not affect your mortgage. So I don't know how many times we have to say that. Fed rate cut is overnight lending between banks. And it's not just the rate. It's the Chairman Powell's job is to monitor the money supply. It's a monetary policy for the United States. And he does that by increasing and decreasing the holdings on their balance sheet. So it's not just when they say lowering the rates. That doesn't really matter. In fact, mortgage rates were up about 50 basis points yesterday. So the 10-year was up. And that's just because there's a little bit of uncertainty coming on. Fed's kind of backed off. John Williamson, the New York Fed president, this morning was saying, he likes where they are. They're in a pretty good place. Still keeping an eye on inflation a little bit, but he thinks that they're going to be data dependent. They're going to watch what the data says, what happens. New administration coming in. Like I said, there's a positive energy going here with this economy. And today there's a triple witching day. Stock options expiring, index futures expiring, and index options. Actually, it's all-time record, $6.5 trillion in stock options expiring today. So that's going to create volatility in the market. So this afternoon should be pretty interesting. See that in the financial news section. But anyway, that's all noise, like I say every week. My job's to take the emotion out of the deal, get you where you need to be. Educate, facilitate, and advise. So thanks for watching. We appreciate it. Merry Christmas. We'll be back next Friday. Like I said, I don't know. Next week's going to be kind of weird, and the following week, but we'll go live next Friday. And Merry Christmas, Happy Holidays, however you celebrate, and we'll talk to you soon. Thanks for watching. Have a great day. Bye.